Hello Black Boxers, welcome back. So, can you see me? Can you see me? You can, right? So, I can't do anything about it. So, this kind of getting dark. So that's why we are having this trouble here. So, the previous video I showed you about this setup from up here to down there. So you can see we had, if you remember, how much setup did we have? Did we take? How much setup did we have? Of course, we have black box here, and there, and of course to down there too, down there, and we got one up there too. Right? It is simple. It is easy. It is easy. It is too easy. It is too easy. So, anyways, but we are interested in trading on this one because that gave us a break. There was a breakout rise there. And we are only interested in this one, okay, and we are only interested in this one, the third. So we got three setups. So this one we don't really know what happened, so we're just gonna wait. So we're just gonna wait and see what the market is gonna do, and we will take what it's gonna give us. Okay, if it breaks the downside, I don't care, I will sell. If it breaks the upside, I don't care, I will buy. As simple as that. So this was things that I showed you in my previous episode. Okay, the previous episode. So today we'll be jumping to this one. So this is $0 on 1 hour time frame. I'll show you most of the currency pairs and indices, gold, even gold too. Okay, so don't worry, we'll cover everything. So what do you see here? See a black box, right? Don't you? Don't you see a black box here? The two candles black box. Even the classical black box is here. But only we are snipers, so we'll be using the two candles black box, which means this one, this doji, let me say, a spinning top. Okay, it is very it has no body at all. And then the third one. These are the setup. This is the setup. Okay, this is the setup. So what do? You take out your fig. And after breaking, that is what you're gonna do is after the price breaks someone up there, you take out your fib and point to the upward direction. TP1, TP2, and TP3. I guarantee you it is up there. TP3, TP2, and then TP1. Okay. Okay, after that at TP3 look what happened. Complete change. Complete trend change. It changed from bullish to bearish. Okay, so anyway, this was our setup. What do? We buy exactly right at 2.5% down there, our stop loss. Okay, targeting TP2 up there, then TP3. We take partials at TP2, we take partials at TP3. You let the other don't touch nothing. That is exactly what's happening. So after TP3, I usually recommend people to trade their stop after TP3. Okay, because TP3 is a moment that the price just changes direction suddenly, like this quick snap. It changes direction. Why? Because it fulfilled everything. It fulfilled TP2, it fulfilled TP1, it fulfilled TP3. There is no TP4, there is no TP5. There is nothing like that. They are only interested in TP3 and TP2 based on the height of the black box. If the black box is this big, where is the TP1 gonna be? TP1 is gonna be up there. TP2, I can't really draw it because there is no space here. It will be under the sky. Okay, it will be huge, huge. Because that's why I tell you it all depends on the height of the black box. Simple as that. If the black box is huge, the TP will be huge. If the black box is small, the TP will be small. Okay, so exactly how we got this. The Panda's black box, beautiful. This is just amazing. Nice delivery, right? Bam. Nice delivery. Entry. Bam. That is nice delivery. There is nothing more than this. There's nothing more than this. Okay. Then what happened? Then we come to here. What do we have here? We have this. We have this. Why would I take that? Because the candles have to overlap on each other. Okay. The candles have to overlap on each other. It is a must. It is a must. They have to overlap. Otherwise, there is no black box. No classical, no either. Neither classical black box or two candles black box. It is non-existent. Nothing at all. Okay, there will be no black box if they are not overlapped. They have to overlap. That's a keyword, right? So notice this one is the one that I talked about it on the start of the video, this video. And on my previous episode, I have talked about this price run dumping, this price dump. So I'm not gonna touch that again because it will be just regurgitating. Okay, it's the same thing over and over again. It is done. You can check the video again for yourself. Okay, I'm not gonna uh, speak about this again. I'm not gonna. There's nothing new. So we have talked about this. So I'm gonna talk about here right here. This one. Because this one we didn't see. So what happened here? This candle, this never overlap. The bodies, I told you the bodies have to overlap. Especially the two candles, the first two candles, their bodies have to overlap. But the third candle, it can be the wick. We don't care if it is the body or the wick. But it has to overlap like this. This one is a wick, right? This is a wick. So it is valid. It is valid. I don't know, man. I think I'm getting uncomfortable. I don't know what I read earlier. So anyways, we got one, this candle, straight up. And then the red one, bam. And then what did the third do? It overlapped. Which is the weak, there is no body. That's beautiful. Even if it is a body, we will take it. Okay, we will take it. It's the third candle, we don't care. It's all, it has to overlap. It has to at least hit 50% of the candle's body, the previous candle's body, the two candles body, at least that's a requirement. Then what happened here? Nothing. Why? The 2.5% is not broken. What does that mean? You're not gonna sell nothing. We don't sell, we don't buy. Why? It didn't break. It didn't break. It broke. Yes, there is some liquidity graph. There is some low broken, but it doesn't fulfill our criteria. So we're not gonna take any trade here. My goodness. Okay, we're not gonna take any trade. So we will pass this. We will wait for another one. So what happened? Another set of candles started forming. They formed their own league. They formed their own community. So we're gonna take this one. We will dump this. When I say we will dump, we are not trading this one. We will not be trading based on this. We will not interact with it. But we will use it as a directional indicator. It will never change half. If TP2 is not hit, it will be used as a directional indicator. Do you get what I mean? Do you get what I'm saying? So what happened? What happened here? So look how I did it. This is 50%, this is 1, this is 100%. The downside. This is TP1, this is TP2, and this is TP3 down there. And crazy thing happened. Crazy thing. Crazy. So right here, there is no trade. Why? We didn't break nothing. This is a week of the second candle. We have to break it. That is a key event. That's a key event. That's a determining event. Whether if we are entering a trade or not. That's a key determining event. Then we will come to this one. Why? That is abandoned. Why? Because we got a new black box. What does the first rule tell you? Trade is a new one, bro. Trade is a new one. So we'll jump to the next. The previous ones will be used as a directional purpose or directional indicator here. Okay. Then what happened? This one's TP is not it, right? This one's TP is not it. Where is TP? Down there. That is where we are heading. That is where we are expecting the price to gravitate. So we'll put a horizontal line. And then we will put another horizontal line. That is TP3. TP3 down there. You got me? And then what do? We enter a trade. Why? Because the key event happened here. Key event happened here. What is that key event? The break of structure here. The lows of the two candles was broken. That is exactly where we enter. That's where we enter. Stop loss above there. Little below. Above there at 2.5%. What is 2.5%? We will use a grid. This grid. This grid will tell us where we should place it. On the next grid. We'll put it on the next grid. But since, as you can see, since this candle, right there is the highest, right? From the three, that's the highest, which means before entering a trade, this is the highest, these two candles, right? Which means I'll be putting my stop loss up there, not here. Why? Because as you can see, it is these two candles traded halfway of this box, this grid, the lower grid and the upper grid. Halfway. So I should put a little bit above halfway of the two grids, the above grids. Why? Because once the price comes back up and hits my stop loss, I know that there is a change in direction and I might be wrong. There will be the third model or the fourth model. So that is a determining moment. This is the determining moment right there. Okay, that's the determining place. That is what makes this setup invalid. I mean the model invalid. Which model? The first model. Why? This thing broke. This thing broke. Never retested, never did nothing. It traded up and then what did it do? It first broke, right? It first broke and then delivered. When you measure the TP2, right? When you measure the TP2, it is hit. This is the TP2 right here. Okay? You got me, right? So that's how you place your stop loss. So you place your stop loss based on this. Okay? Where is the two candles high located? And you will put that highest price right there into the next grid high. Right there. The same thing. Okay, simple. When you enter is the same thing, okay? The next grid is down there. Okay, you see it. Okay, then what happened? Then what happened? It all depends on the head of the black box, okay? It all depends on the head of the black box. Then once this thing breaks, once this thing breaks, we are expecting the price to move down where? There. Why? Because we have already put our FIP, okay, in both direction, on the upside and on the downside too. Since we broke to the downside, I am more leaned. I am more leaned on the sell side TP2. On the sell side is TP2. So I will be expecting for the price to gravitate to the downward direction or lose its value, get it cheap. Okay, raw dollar gets cheap now. Beautiful. That is exactly what happened right here. Okay, that's exactly what happened. And the rest is I have talked about this, so I don't have I don't wanna talk the same thing over and over again. So okay, I would like to go to the next screenshot right here. Okay, and then tell you the other things. Okay, because we have a lot to learn. We have a lot. So let's come back here. What do we have here? Do you see any black box on this chart? Do you see any black box on this chart? Yes, right there. One, two candles black box. Okay, and then what do we have? Right there, down there. Two, one, two, then up there, down there. Sorry, three, and then what do we have here? Four, right? What do we have here? Five, right? It's five, and then it is six right here. So this one is the one I showed you on earlier. This one is the one I showed you earlier. This run I told you about this thing. But I told you about it right here. Let me show you. This one, this one, right, this one. Okay, these are the same thing. So I told you about this. You buy it up there. These are look the delivery, nice. So when you measure this one, your TP2 is actually right. Your TP is right. So they drove it high, deep. They traded it deep and then collapsed. So this was the start of the downtrend. Right? Another accumulation for a downtrend, preparing themselves. Because as you can see, it's dumped right here. So this one is this one. They are preparing for a downtrend. And look, we knew they are collapsing right there at the start. That's how the two candles operates. It's just too specific. It is beautiful. It is just beautiful. And there is no there is nothing required from our side. Right? It is simple. It's just simple. It is you spot three candles, and then you measure the TP, and then you wait for that 2.5% break, and then you put your stop loss and enter it. Simple. Then remember the models, three models. Okay, break and retest, then straight breakout, real breakout, and then the third model, which is the single fake out. The same thing. This one is the third model, right? What you are seeing is the third model, single fake out. We delivered the upside. We made money, but unfortunately collapsed. We didn't take partials because our TP was not it, so it's not our fault. So next thing happened, what I the downside, which means we are selling. So we are selling. So we'll be getting. I mean, TP2 aiming TP2. Okay, we'll be aiming TP2. That's what happened. Exactly what happened right here. So let me tell you about this one because we already know about this. Let me tell you about this one. So what happened here? Exactly what happened right here is we got 1, 2, 3 candles broke. But are we entering any trade? No. Why? It never broke the 2.5%. What about now? It did break. But we are not selling this one. This is a huge lesson right here. We are not selling down there. Why is that? It is because our stop loss up there. Our entry down there. Look at our stop loss. Look at how high our stop loss is. Is this worth it? Do you think this is worth it? Would you take this trade? If it happened in front of you, would you take this trade? I don't think so. No one. No one would take this trade. This is nuts. This is X. Done. This is X. Lucky for us, we will be using this as what? A directional indicator. Directional indicator. A directional indicator. So we will project it to the downside, as you can see, just like I did here. Just like I did right here. I measured from up there to the body. Then what happened? TP1 ended up being here. Right? Then TP2 is nowhere to be seen. What does that mean? It means that we are yet to come down. That is why this collapse is happening. Do you see where I'm going with this? Do you see where I'm going with this? I'm glowing with a smile, bro. I'm glowing with a smile. So when you determine your body, the previous and hit and deliver the TP2, and since you already know we broke to the downside, you are projecting the Fibonacci to the downside, which means TP2 is going to be down there. So every setup you find here, when you find a sell setup, you are looking at down there. TP2 is found down there because this price is gonna go down there because it has to. It has to hit TP2. I don't care if it goes down, I don't care if it goes up, but it has to hit TP2. If it changes direction, it has to move up and hit TP2. It is a must. I'm telling you guys, I'm telling you. Just believe me. I'm gonna prove it. I have hundreds of proofs right here. So when I interested up there, this is exactly what happened right there. So our TP2 was down there. The measured TP2. Look at this. What happened? And look at that. This is this one. This is this one's TP2 down there. Where is it? This one. This one is this one. Do you see where I'm going with this? So we already know that this price is breaking the downside. What do? I measure, just like I did here. I put my Fibonacci from the body, from the top body to the bottom body. So what do? I see where is the P2 is located. What do? Then I put my horizontal line and I will wait for the price to gravitate down. I don't care if price moves up. It still didn't break the high, which means I am still looking for a sell for this one. But I do not take a trade based on this. This is for direction. This is for bias. You don't have to go to the daily candle and anticipate that the daily will close like to the upside because the liquidity grabs to the upside. No. What? It is just ridiculous, bro. When I see people struggle while talking about talking, they have 100% win rate, or I mean, talking they have a highly profitable strategy, they still lose, bro. They still lose, they still struggle, they still analyze the market from top to bottom, and they still lose. Isn't that ridiculous? It is unbelievable. It is unbelievable. So exactly what happened here is, so this is a perfect example. It's perfect. It is just perfect. Okay, let me tell you about this one. It's the previous one. The previous one. Who had this? We had this TP2, TP1 and TP2. And what happened right here? Price reversed direction, bro. After TP2, there was an hit TP2 for this black box. The first candle, I apologize that you won't be able to see it there, but there it is. It is. So what happened? The project the downside. Why? The candles all gravitate to the downside. They all broke the downside. So what do? You put a horizontal line down there. And look what happened. After nailing TP2 exactly right there, it is just look at this. Is this a coincidence, bro? Is this a fucking coincidence, bro? No, it is not. It is not a coincidence. It is. Look at that shit. And then they came back, hit it one more time. They took liquidity or whatever you call it. I don't care if it's liquidity or anything. I don't care. They came back again more, hit it one more. And then they are nowhere to be found. They went like crazy. My goodness, bro, it is just crazy, bro. It is just so TP2. Do you see how important TP2 is? Do you see how important TP2 is? That is the maximum. It is not the most maximum, but it is the maximum. Please, you will have to take partial profit. The maximum price. And then there will be TP3. Okay? Just like this one. Look at that shit. Isn't this crazy? Isn't this crazy? This one. That is TP3. We measured from the body to the body, and then what happened? We broke up here. So we don't take a trade based on this. Why? Because we got a black box. We say we buy that shit. So what happened? This is TP1, this is TP2, and then TP3. Look after that what happened. Look. Look what happened. The price didn't even move a little tick up. It didn't even challenge this high. Why? Because it already has delivered upside. Now, the algorithm or whatever it is running from, algorithm or a program, I don't care if it is a program, I don't care if it's an algorithm, I don't care. I don't care. So what happened here? It never went above this high. This high delivered to TP3. This high delivered to TP2. Look what happened. This candle right here, what you are seeing here, this candle, this big candle, is because TP2 was nailed. I told you that TP2 is the most important one. Don't forget that shit ever. It is ridiculous. So I'm sorry, for this one it is TP3. It is for this one. Yeah. It's TP1, TP2 and TP3 right there. TP3. Yeah. If the price moves past TP2 then it is TP3 and after that there is no more. There is no more unless there is something behind it. Like this one. Like this one. That is why price is going up. Right here. Look. 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 That's why price is moving up. Like look. There is undelivered TP. That's why. This price run is to satisfy both these black boxes and this one too. Okay? This price run actually, this price run, this big candle already satisfies this one. But for this candles, TP3, for this black boxes, TP3, look, TP1, TP2 and TP3 is right there. For this black boxes typically, what do the market have to do? It has to deliver TP2, then collapse. That is why we take partials at TP2. It's the most important place. It is the most important place, right? And then look at the second polarization. This one is the second polarizer. Riser is a buy zone. Once I see that can't move like the upside, I will buy it. Look at that. I will buy it. I don't buy down there. Why? Because it is not yet proven. It's not yet proven. Because after TP2, I don't know if the price is gonna go to TP3. I don't know. It is not guaranteed. What is guaranteed is TP2. Okay. What is guaranteed is TP2 price for this black box. For this black box, TP2 is guaranteed, but TP3 is not. That is why I don't enter at the retest. I only enter after I see some kind of bullish indication, like this kind of candlestick. This kind of candlestick shows a bullish power, like this. This is a bullish power. It's a bullish power. There is no bearish power here. It is bullish. Everything is bullish. Okay, so I buy rise here again. I bought here. I took partials. I took my partials at TP2, and then I bought down there too. Up there, I'm sorry. This is the black box. I bought up there again. So aiming TP3 range. After that, I will be seeing this one, and after here, I will buy up there. Aim this one, take partials. Aim this one, take partials. Okay, and I already know that this is unhit, which means I will be expecting for this price run to come to this one. To come to the second TP of this black box right here. Okay, okay. Do you get it? Do you get it? So after taking profit on that, look what happened. The price just made a huge candle. So it collapsed. It collapsed, right? It collapsed. This was a huge bearish candle. So everyone was panicking. Oh my God, my money is gonna be gone. It is my life saving. What am I gonna do now? It's everything. It is chaos everywhere. So you will be panicking and getting out of that. We don't do that shit. Why? Because we have this direction right here. And hit the piece here. And we have two partials here. So we are now relaxed. We are trading with our profit. The price is away from us. It came back, but never too close. We are still at break even and then traded a little bit drawdown and then traded a huge hammer which was bullish power. This is a bullish power. And then look at this fantastic candle. This fantastic candle, it delivered to the P3. That's ridiculous. That's out of this world. It's just amazing, bro. It is. It is just amazing, bro. It is beautiful. So the one thing that I didn't talk is right here. So I'll tell you everything. I will not hide nothing. Nothing will be hidden from me. Nothing. Absolutely nothing. That would be embarrassing, bro. That wouldn't be right if I do that. And then look, bam, bam, he broke, right? I said, where do I say? At 2.5%. At 2.5% I sell. Where is 2.5%? This is the low. I only see the lowest from the two. The lowest from the two. From this one to this one. The lowest. The lowest is this one. The second candle, right? I measure from that. Okay, I measure from that low to this low, right here. So what happened here? This, I told you to use a grid. Okay? Use a grid. Use a grid. So right here, this is where it stopped. The breaking candle, where did it stop? It stopped up there. The grid is down there, right? This is the second grid. This is the third grid. This is the fourth grid, and so on, right? So what happened here? Which one is the lowest? Which one is the lowest? This is the lowest, right? Which means this candle has to advance a lot to the downside. It has to advance a lot to the downside. It has to break what has not been broken by this candle. But if you don't do that, if you don't want to do that, you're gonna say that, right? You sold that thing. Let us say you sold it. You sold it. Where? Right there. You sold it. A little bit above 2.5%. And then what happened? You're in a little bit profit if the spread is great. And then what happened? The price started to go against you. This is your entry. This is your stop loss up there. Because this is a black box you are dealing with. Then the price came back up at you and then collapsed back to profit a little bit. And then finally the deciding moment came right there. Your stop loss was nailed. Bam. So when this thing is happening, I was thinking about this black box. Thinking about this black, where is it gonna break? Which direction is it gonna break? So when it breaks up there, I am buying. I am buying. I am buying. Okay. And then what happened? And then what happened? Then another black box formed. What do I do now? I buy again. Why? There is no sale. There is no sale opportunity. So I'm gonna buy that shit. I'm gonna buy it. Then I'm gonna target TP2, TP3, then TP3. Right? That one is hit. My stop loss is hit for this one. I lost the money. From there down there to up there, I lost some money. So I made some money for this one, and then I waited a little, and then made another money, right there, and then made another money. So this trade is still intact in the direction of this one, in the direction of this. Why? Because this candles, this candles TP2 is not hit yet, so that's why I'm trading the direction of this one. Then TP3 is in. Okay, if the price advances more, I'll be anticipating TP3 too. So that's exactly what happened right here. Okay. So for my man today, I'm not feeling good, man. I think I ate something bad. So this is exactly what I'm. The only place that we lost money is right there. This is it. The others are winners. Like expected. The others are winners. This ended up in the fourth, I mean the third middle right there. This is a black box. 7 and then buy like crazy. That's why I tell you the third model is nuts. The third model is crazy. It is crazy, bro. It is crazy. It's out of this world. Look at the delivery. It went to the sky, bro. Even if we are in a downtrend, it went to the sky and then back. So, anyways, even with this pump, it didn't even break this. Why? Because this is another black box here. Down the right there. You see the two candles? It did it. It tried. It tried. It tried. It tried. Never. It never. So, finally, what happened? I said, as you can see, it tried, it tried, it tried, it tried, finally collapsed. bam, retest, collapse, retest, collapse, retest again, collapse. It is ridiculous. It's just crazy. So I'm gonna do some think about this 2.5%, and I'll deal with it. I'll tell you once I find something, okay? Because I mostly use a grid. If you use a grid, you're not gonna enter this one, right? Because this is higher than this one. This is very low, close to the grid, but this one is high. This one is higher. This one is higher. The grid is not even seen. The grid cannot even be seen, right? It is down. And right here it is lower. This one is higher, I think. Even if they are equal, I'm not going to enter it right away because they are equal. It has to break. It has to break a tick. It has to go a tick below. That is the deciding moment, okay? That's the deciding moment. So it was nice talking to you. So I will be seeing you in the next episode of this mentorship. Okay, so we have seen a lot here, we have learned a lot. So if you have any questions, just ask below, okay? Just ask me on social media or on my YouTube channel. You can put your questions on my YouTube channel and I'll try to answer it. So anyways, so this is the time it was for running out. So these are our next topics that we will discuss potentially. So I'll see you in the next one. So thank you for watching. Okay, peace out.